Hey, what's up, guys? It is Dan Plata, CEO of Blue Sky Services. I am super pumped about this video today. This is the target budget spreadsheet for the lean and mean operators that are out there. I put this together with my buddy Aaron Parker, and this is specifically designed for those guys and gals that are out there hustling and filling their pockets up, reaping the rewards of every job that they go out and do. And you guys already know this. This is no secret to you, but you have an opportunity to be massively profitable when you're lean and mean. You don't have all that overhead and structure. Every time you go do a job, you're just filling up your pockets. And because of that, budgeting correctly, running your books correctly is super, super important, because every time you save some money and stash it away, you get to keep all of it. It's not like you've got to pay it out to a bunch of people. It's not like you have to pay it out to a bunch of vendors for different infrastructure and things that you've got. It just fills up your pockets massively. So this stuff is super important for you guys to make sure that you're reaping all of the rewards of all your hard work. So this is specifically designed for that lean and mean person in business, with the solo and the helper, however you guys have it set up. A couple quick notes before I dive in here. So this is built primarily for pressure washing. However, if you're doing window cleaning, if you're doing landscaping, or you're performing some other services, the lean and mean operator, this still works for you. And I'm not going to release a separate budget for each of those industries, because this thing is so easy to tweak and make a couple adjustments for your numbers and still use it for whatever industry you're working in. And I'll kind of talk through that as I go through the sheet here in a second. And the other thing I'd say is there's some additional tabs in here. There's one to build up your sales and marketing plan. There's one for payroll, which can actually be very useful to you. There's one for assets and liabilities when you're buying equipment, vehicles, stuff like that. That's important to track for tax purposes. The payroll one, though, if you have a helper, if you pay them cash, don't put them in here. They're not in your books. You're doing things a little differently, so don't put them in here. If you're paying them on payroll and paying payroll taxes for them, there's a payroll tab in here that'll show you that is basically built for you and a helper, and how much you're paying that person. As well as if you take a wage, which you actually should, and go check out Bookkeeping Beer and BS videos if you want to see why you should do that and how you should do that. But you should be an employee of your lean and mean business, and you should take a wage for tax purposes. You can save a bunch of money. I won't get into that today, but use that payroll tab to kind of walk you through how you would pay yourself and how you'd maybe pay a helper. And I'll show you that. And let's do some screen sharing, and I'll walk you through it here. There she is. Actually, wait, I got to pause it for a second. Let's pause this thing. Pause the video. There we go. I'll be right back. All right, I'm back. I totally had deleted out our logo and put a new one in, because we got a Badass Budgets logo made, thanks to Aaron Parker. And then I forgot to drop the new one in. So now the new one's in there and we can proceed. So a couple things to note right off the bat, just to keep in mind as you're building a budget. Right at the top, we have the number of business days in a month. And that might sound trivial, but mathematically it ends up being super important. And I'll point out the biggest difference here, just so that you're kind of thinking about this as you build your budget. But for example, February has 20 business days. March has 23. So we're talking about a 15% increase in revenue, literally from one month to the next, for no reason other than there's just more days to go out and do work. Now, as a lean and mean person, you might be working weekends too. So you may even change how you view a month versus just normal weekdays. But just keep in mind, not all months are created equal. And so you're going to have some peaks and valleys in your sales simply due to that. Payrolls are in here as if you're paying weekly. If you are not running payroll, then that is irrelevant to you. If you are running payroll, check out the lean and mean payroll tab that we got in here for you and a helper. And like I said earlier, you should be taking a wage and paying payroll taxes on it, because you will save yourself a whole bunch of money if you get set up as an S Corp and do that. If you don't know what the heck I'm talking about, message me privately. Go check out Bookkeeping Beer and BS. I talk a lot about becoming an S Corp to save a whole bunch of money on taxes. That said, let's talk about the budget. So first thing is, you're going to budget your sales by month. So we're saying in this case, like I said, this is mostly pressure washing. We're kind of in that lens here, but this works whether you're doing window cleaning, landscaping, something else. So we're saying $20,000 a month. You're going to be able to crank out $240,000 per year of revenue. Now, you're going to have some peaks and valleys in there, build your seasonality and whatever you got. But in general, we're saying that a guy pressure washing by himself could go do about $1,000 of revenue in a day. Super doable. So you're going to have some expenses. It's not just because you're running lean doesn't mean you don't have any expenses. But like I said earlier, what's really cool about running a lean and mean business is every time you save money and you manage this stuff correctly, all that money goes back in your pocket. You don't share it with anybody. You don't have a bunch of overhead you need to pay it to. You don't have a whole staff you need to pay it to. You literally just get to reap all the rewards of managing a tight business. So you've got 5 different groups of expenses. I'm going to run through all those right now, as well as how we came up with these targets. So first is cost of goods sold, stuff that's happening out in the field or that you're doing out in the field. So one is we got you some money for uniforms and apparel so you can look cute out there and, represent yourself well. Got a little bit for damages and repairs because no matter who you are, no matter what you're doing, stuff is going to break. That's totally fine. You're going to burn some plants, whatever, going to happen. Budget for it. It's not the end of the world. Just make sure you're setting aside a little bit of money for those circumstances. Got about 4% for fuel in here. That's pretty accurate for a pressure washing business. Depends on how far you go out from your shop, right? And how big your area is. So tweak that if you need to. If you're doing window cleaning, you're generally running a little bit smaller rig and you're not fueling up equipment as much. So you might even be like 2%. When we do window cleaning, we're running Ford Transit Connects instead of trucks. Our fuel is less than 2%. So we save thousands of dollars a year on fuel. It just depends on the rig you're running. So pressure washing, you're probably at around 4%. If you're doing wind and landscaping, I'd say you're probably around 4%, maybe even a little bit more because you're hauling some real big stuff sometimes. We'll keep it at 4. If you're landscaping, maybe you're 5 or 6. If you're window cleaning, you're probably closer to 2 or 3. Merchant fees would be charging credit cards out in the field. Depending on how you charge your customers, you may need to reduce that a little bit. But in general, when you charge a card, you're probably paying around 3% credit card processing fees. So I built 2% in here, which basically assumes you're getting a check from plenty of customers, but the majority are paying with a credit card. Last thing we've got in cost of goods sold, the stuff happening out in the field every time you do a job, is you've got supplies and chemicals. And I'd say we're using supplies and chemicals to mean stuff that you use up at the job. So not your pressure washers, not your hose reels necessarily, but the stuff that you're burning through at every job. So it's mostly chemicals, surfactants, stuff like that. If you are in the pressure washing space, if you're in lawn care landscaping, maybe it's seed or fertilizer, something like that. If you're in window cleaning, it's your soaps that you're using to clean the window. It's the mops and the squeegees, stuff like that. Tools and equipment would be larger pieces of equipment that you expect to use for a year plus. So the pressure washer, the ladder, the stuff like that. If that thing is over $2,500, it technically doesn't go on your P&L. It goes on your balance sheet. It would go on this assets and liabilities tab. The tax ramifications of anything that you spend $2,500 on or more is different. So you got to track it differently and create a capital asset and then depreciate it. So that's not in this. If you're buying a $4,000 pressure washer, it doesn't go here. It goes here. So this is like your hose reels, your hoses, your guns, all that stuff. So if you're running lean and mean and you're pressure washing, doing a pretty good job, you should be around 15 to 16% expenses out in the field used up every time you do a job. And then the cool thing is you do that work, and when it's all done and kept track of in your QuickBooks, you can just go and enter it right in here and see how you did. And as you enter it, there's even a section at the right. There's no data in here, so this isn't working right now. It looks like a bunch of errors. But as you put actual numbers in there, it's going to tell you what you actually did percentage-wise compared to what these budgets are. And then it'll show you, did you beat that budget number or did you miss it? And it's actually going to color code it for you. So if you beat the budget, it's going to be green. If you miss it, it's going to be yellow. So just colors, easy to look at. tell you the story real quick. So in general, we have our gross profit here, which just means how much do you get to keep every time you go to do a job. If you're lean and mean, you're keeping close to 85% of the money every time you go do a job. Now, part of that is like your wage is being the one going and doing the work. Part of that is how much as an owner you would get to keep from going and doing, from sending somebody out to go and do that work. In this case, that somebody happens to be you. So let's crank through the rest of these sections of your budget and see how else you're going to be spending money to grow your business and put that revenue in your pocket. So one is to do 240,000 of revenue in a year, you sure as heck got to have some marketing to go find those clients. So we've got some marketing built in here for your software, website stuff, kind of your marketing infrastructure. It's not necessarily like converting into clients, but it's stuff that you need behind the scenes to make sure that clients are finding you easily. You've got ad spend and awareness, your Google ads, your home advisors, what have yous, where you're paying as the ads get run, maybe some Facebook ads or something. And then you've got some marketing labor contractor expertise that you might be paying, like somebody to do your SEO, for instance, like my man, Aaron Parker. So you've got some marketing spend. We've got about 8.5% of revenue built in here for marketing spend. Obviously, it's super important. If you're going to run a good business, you got to have the right amount of customers day in and day out to crank out that revenue. So make sure you're marketing the right amount. We think, around that 8 to 10% is enough to keep you busy. Admin expenses. You're not going to have a lot of admin expenses. You're lean and mean. You don't necessarily have somebody sitting in the office all the time. You might have a virtual assistant. You can see there's a line in here for a virtual assistant. Depends on how you're answering your phone. If you're super lean and mean, you're the one answering the phone. But you might say, hey, I've got a virtual assistant. And you can see there's these percent override and dollar override sections in here. If you think this target is incorrect, the place to override it is actually in the column next to it. So if I think I'm going to have 0.5% a month on virtual assistants, I'm going to put 0.5% in there. And you can see then it overrides all of these other columns out here based on the revenue per month. Now, you might even say like, I've got an agreement that I'm going to spend $500 a month with this virtual assistant, and then she's done. And you're just going to type in 500, and this dollar override actually overrides the percentage override column. So that's how you can use those to get a little more precise. I wouldn't change the industry targets. Like I said, unless you're doing more window cleaning or maybe more landscaping, then adjust those industry targets because your industry is going to be a little bit different. This is built a little bit more for pressure washing. But if you're just tweaking your specific business model and how you run your business, use the percent override to change the percentage that we're using. Use the dollar override if you already know specifically the dollar amount you're going to spend each month. So that's just an example of how to use it. I'll show you another place where like you're definitely going to want to use the dollar override in here. So you probably got some fees set aside for CPAs, for bookkeepers, whatever. We got 1% built in here for your accounting services. We've got a little bit built in here for some bank charges because they just kind of happen. And then some office supplies and expenses, your computer, printer, paper, not going to have a lot of it, but you're going to have some office supplies. So admin expenses, pretty small. Virtual assistant, you're probably going to have a little bit of something that you add in there if you're not the one answering the phones. So just be on the lookout for that. Add that in if you need to. And then, of course, a spot to enter your actuals as you go. Now, there's two more groups of expenses that you're going to have, whether you want them or not. These are your overhead buckets, and you've got two types of overhead. You have fixed overhead, which are things that you lock in, contract, usually pay the same every month. And there's something usually like negotiate or contract, like I said, and you're locked into them. And then secondly, you're going to have variable expenses, which are things that happen and come up, either opportunities or problems, and then you just got to pay money to solve them and make them go away. So fixed expenses first, you're going to have your liability and your auto insurance. That's going to be the meat of it. And you should be around 2% a month for that. If you're running some huge equipment, maybe you're pushing 3% to insure all that equipment, but it should be around 2%. And then you've got 1% set aside for software, maybe your CRM or your phone system. And then utilities, cell phone, internet, just the bills you got to pay behind the scenes to keep the lights on for your business. So we've got 4% set aside for those fixed overhead costs. And now your variable costs, we've got another like 6% set aside. And don't get hung up here on the individual percentages for each line item. Just know that this should be around 5 to 6%. And if it starts getting above that, you got to put the clamps down. These are all things that are like very reactive. When something happens, you spend money on it to make it go away. So this is kind of a frugality metric, if you will. And if this is getting out of line, it usually means that you're just throwing money at problems and not necessarily problem solving them. So things in here would be like tags, licenses, penalties for vehicles, education, events, leadership development. If you're going to a conference or a convention or something like that to pick up some new stuff or see what's new in the industry, that falls into here. A little bit for meals and entertainment, although that's usually a personal expense. We've got money in here for auto repairs and maintenance and for tools repairs and maintenance, about 2.5% combined between the two. A little bit set aside for shop supplies, although I'll say you shouldn't have a lot of shop supplies because most of the stuff is going to be on the truck. And if it's on the truck, it's tools and equipment. It's going out in the field. This would be like wrenches and power tools that you keep back at the shop, if you will, for wrenching on stuff when you're done. Any other taxes, license, penalties, permits, a little bit for travel. That might be 0% for another year. And then travel meals when you're on the road. And we distinguish between travel meals and meals and entertainment. Travel meals are generally 100% tax deductible. Meals and entertainment are usually only 50% tax deductible. So in general, super important to delineate that when you're actually traveling and capture those as travel meals. So that's it. Those are all the budget groups. And you will see once you get all done spending your money, you should have about 64% left of your revenue. So if you do $240,000 in a year, you should have $150,000 in the bank. Now, you have $150,000, but any capital assets or anything like that, if you bought a new truck, if you bought a trailer over $2,500, like I said earlier, that's over that $2,500 threshold. It's going in assets and liabilities. It's not on the P&L. So this isn't your cash flow. This is your operating profit. You're going to reduce that by any depreciation that you've got from any capital purchases that you have, those vehicles and equipment. So if you want to dive into that and know what the tax ramifications are going to be, then there's this section down here for you to enter that stuff. How much depreciation are you going to have on those vehicles and that equipment? You should be able to get that from your CPA. You can punch it in here. If you don't want to use the assets and liabilities tab, just punch it in here manually. So let's say we're going to have 50,000 of depreciation. Oh, my formula is all messed up. I'm going to pause it and fix that real quick. Let's do that. All right, we got her fixed. So what'll happen here if you put your depreciation in as 50,000? Maybe that's what your CPA gives you. That'll populate over here. Or if you did use this and you fill it out and you put in the different assets that you have and how much your payments are and how much are going to depreciate any existing stuff you've got, it's going to pull through this number 95 here, which totals all your depreciation for the year. So anyway, let's turn this. I think this tab is off. Yeah, so if you did want to turn it on, you just select use and then it'll pull it in all the way over to here, which is 0. But we're just going to use what we manually entered in here. So I'm going to take this use off and literally just delete it out. And now it'll pull in the 50,000 that's already here. So like I said, if you want to capture that level of detail, that's how you put your depreciation in. So now your income is really 102,000 instead of that 152, reduces your tax liability, which is nice. And then the last thing that you can do in this lower section is look at your cash flows. So you might not be taking a wage per se, even though, like I said earlier, you probably should be. Talk to me separately if you're not an S Corp, if you're not taking a wage, you're leaving money on the table. So let's assume you're taking a distribution, you put that number in here and it's gonna take that out of your cash flow. And then it'll show you how much cash flow is left in the business down at the bottom. And again, this isn't necessarily going to show your depreciation. If you pull in assets and liabilities and you show those cash outflows for paying for vehicles, then it'll pull it in here. But right now we're not using that tab. It's not filled out. So this would just say you're taking 30,000 out of the business as a distribution. And that's coming off of that 152 that we showed as profit for the business. So it shows your budgeted cash flow at the bottom. You don't have to use those sections. If you want, you can just be like, okay, my business is making 152,000. Cool. We're going to leave her there. But we all know there's more to the story with taxes and how much you're actually taking out of the business and all that stuff. So before we wrap up, I'm just going to hit on these tabs real quick, what they do. There's separate videos on how to use them. So if you're like, ooh, yeah, I would like to, think strategically through this part of my business, then dive into this tab, fill it out. The cool part is you can mess around with this and put all the inputs in and not use it. So just because you're filling it out doesn't mean it's automatically going to come into this main spreadsheet tab. For instance, sales and marketing, we've got some stuff already in here, as if this is what you're spending on your sales and marketing. This is just Aaron and I messing around with it. And if you were like, hey, that looks cool, I like that, you select use here, and it's going to change your sales. We had 165,000 of sales on that tab. So it's going to override anything else you've gotten here and pull in that sales from the sales and marketing. And it's also, but you'll notice nothing else in cost of goods sold changes. Everything is still based on these percentages. It's just based on 165,000 of sales instead of 240. So the dollars will adjust, but the percentages stay the same. Now, the spend on marketing changes here to what we had in that tab. So now you can see we're spending 15% on marketing, getting more aggressive there. And it brings it into the lower section down here. So it's just some cool stuff you can mess with. But you can mess with it, change all the metrics. And if you're still messing with it, just don't turn it on. Like turn it on only when you want it to pull into that budget sheet. Same with assets and liabilities. I'm going to swing back to lean and mean payroll last. Assets and liabilities, anything over $2,500. When you purchase something, you've got how much you pay down. You have how much money you borrow for that asset then. You have how much you pay in monthly payments and how much is principal and interest. And all of those things will impact your books. And you need to capture all of them. And this is something we do for our bookkeeping clients so they don't have to worry about it. And then you depreciate it at the end of the year. And that's something your CPA can get you. And we've got room for 5 assets in here. You can add more as needed. You may also have some existing loan payments, not new assets that you bought this year, but existing loans that you're paying down, whether it's an asset or maybe like an SBA loan or something like that. We can put those in here too. And then, like I said, capture all the non-P&L related cash flows, and those pull back into that budget versus actual sheet 2. They won't hit your P&L, but it's sure as hell money leaving your bank account. So it's super useful to track. And again, all you got to do is flip this on to use, and then it pulls in. So lean and mean payroll. This is specifically built for the lean and mean operator. So it's not built to scale. It's built to have you and a helper. So you've got your budgeted sales in here, which are pulling from the main tab, or from sales and marketing, if you're using that sales and marketing tab. It has how much you can produce and how much your helper could produce in a day. So it builds up your total revenue production capability for the day. And then it will tell you how many helpers you need to perform that. You might need 0, you might need 1, you might need 2. If it says you need 4 helpers, then this budget's probably not going to work for you because you don't have helpers, then you've got employees. If you have 1 or 2, maybe you can call them helpers and continue to use this budget. So what it's going to do is it's going to say combined you could do 1,300, but you really only need to do 1,000. So it's going to aggregate and spread out that production across you and your helper. Now you might choose to just go produce this 1,000 by yourself, or if you and your helper went out based on your ratios of how much you each produce, it'll spread that production out to each of you based on the amount that you're going to produce on a daily basis. There's also some room to put them in as trainees. So when you're getting them up to speed, you might not expect them to produce a whole lot, but you still have to pay them. So you can add them in here as a trainee as you get going. And then you dictate how you're going to pay them. How many hours are they going to work a week and how much are you going to pay them per hour? You might not pay them per hour. You might pay them commission. So there's a commission bonus rate pay here for helper. There's also room here for trainees. So you can differentiate between when somebody's a trainee and when somebody's like a full-on helper for your business. So you add all that up. You can also have payroll for yourself if you are taking a salary. Again, you probably should be. For tax reasons, it'll save you a whole bunch of money. But you can put your payroll in here, and then it's going to go ahead and calculate your payroll taxes. If you're just taking a distribution, and you can see this pull over to the other sheet. But if you're not taking wages, or maybe you're taking wages and a distribution on top of it, put your distribution here. And then that's going to pull over to the other tab when you select use. The last thing in here, you might be paying somebody in the office an hourly rate, or you might be paying a separate salesperson some commissions or something like that to go help you sell clients. There's pay down below here for administrative people, not necessarily out in the field doing the work, but trying to help grow the business. So all of this stuff, this payroll tab, is specifically designed for you, the lean and mean operator, you and a helper, maybe a person helping in the office a little bit each week, and then how you pay yourself. Do you take a wage, or do you just take distributions, or you take a little bit of both? So that's all built out. And again, it's all, you can see Aaron and I were messing with this already. But if you want to use it, you just select use, and then it's going to pull over into this main tab. So now all of a sudden you've got some wages in here, and this is your wages for your helper that's out in the field, and it's going to adjust your entire budget. Right the second you decide to use those numbers, it'll all pull in here accordingly. So it's super customizable, but it's also so easy in that you can just literally grab this thing, and you just type in your sales for the year, and the rest is already built for you. So kind of a pick your own adventure. Choose how detailed and specific you want to be, but for sure at least get it. Know what you should be spending on each thing. Put your actuals in as you go through each month, and kind of track how you're doing and see how you're doing. I'm going to make one last note, and then I'm going to end this video. The last note here is when you have sales, you're going to have two different types of sales. And I want to be very explicit about how this works and why it's worth tracking both of these. You're going to have, and there's two rows here, so we've got a place for you to enter both types of sales. I just want to make sure I explain this right, so I make it less confusing and not more confusing. So cash accounting sales do not mean, and I'm talking about this first one here, cash accounting sales. It's not cash sales. It's not that somebody gave you $200 and paid you cash. I highly recommend not accepting cash for record keeping purposes. But cash accounting sales is based on when you deposit the money into your bank account. It is not accepting cash. It could be accepting a check. It could be running a credit card, but it is more of a timing thing. It is based on when the money hits your bank account, compared to invoiced or accrual sales are based on when you actually do the work and invoice the client. You might not accept the payment for another month, but you want to record the sale when it happens for operating purposes, because your expenses are based on when you do the work, not when the customer pays you. If the customer takes 2 months to pay you, you still had to pay for the chemical and the equipment and everything that did that job when you did the job. So it's important to recognize both types of sales. Reason being is to measure how we're operating, we want to use our accrual sales, which are our invoice sales, when we actually do the work. That'll be a better reflection of how we're spending our money to get that work done. However, when we do our taxes, the IRS cares about our cash accounting, which again is when we deposit the money. So cash accounting sales are super easy to get. We just go get them out of QuickBooks. Every time we deposit money, we record it as sales in QuickBooks, go get it at the end of the month, type it in here. Invoice sales are super easy for us to get. We go get our sales from the Customer Factor, from Service Monster, from Jobber, whatever we're using to track our work, and pull our billing report or our invoice report and type that total invoice amount for the month in here. And like I said, super important to have both of them. One is a better reflection of how you spend your money, and how well you're operating the business. The other is a reflection of what you're going to pay taxes on. And if the two are wildly different, then you got a problem. That probably means you're invoicing a bunch of work and nobody's paying you for it. So a lot of things can come out of tracking both of those numbers. That's all I got for you guys. If you need help with this stuff, always feel free to hit me up. If you need help bookkeeping, always feel free to hit me up. This is what we do for our clients. We make this stuff super easy and help them make good business decisions. So get your free target budget. Go watch the video. I don't watch the other payroll video that's out there, because lean and mean, your payroll is going to be very specific. So kind of go through what I went through today and use this tab specifically for you guys. There's a separate video for sales and marketing that you can go out and grab. And there is a separate video for assets and liabilities that explicitly shows you how to use those tabs. So if you want to get really good at this stuff, go check out those videos. Hit me up with any questions you guys got, and go make some money, boys and girls. Good luck. And that's all I got for you. See ya.